Good morning, everybody. Hey, welcome to Monday, June 15th. I hope that you guys had a great weekend. I know I did, and looking forward to today. Got some family flying in and excited to catch up after not seeing them for a little while. So, hey, I want to thank you for joining us today. I hope that your day and your week is off to a good start. You know, when Dave gets online here in a minute, we're going to see that there's a lot of issues out there right now today. We saw a bounce back yesterday, and I'm sure we're going to talk about that here in just a minute. But the other thing is that this morning we're seeing a mass decline again, kind of like we saw on Thursday. So hang tight. Dave and I will discuss that and some little economic news that's hitting the wires today as we get started in this third week of June.
5.7. It's Lady Gaga. She's on the edge of glory. If you're on the edge of your seat wondering what's happening to your retirement fund, you might want to sit down because it looks like it's going to be a red day today on Wall Street. Let's see what's going on with your money and go downtown to the offices of Statler Financial Services, where Phillip Statler is standing by this morning. Phillip, how's life this morning?
Hey, good morning, Dave. Had a great weekend. I hope everybody else out there did too. And but hey, Friday wasn't a bad day. But this morning we are definitely not just pink. We're pretty red this morning, Dave.
Oh, yeah, we always set the table on Monday morning with how the week ended up, and let's do it that way. First of all, Friday's close, like you said, it was a pretty darn good day on Friday. If you took a snapshot of one day, Dow was up by 477 points, NASDAQ was up by 96, and the Standard & Poor's was up by 39. Everything by more than 1%. Dow was up almost 2%. Happy days are here again until you look at the full week, right?
Well, that's right, Dave. The full week, not so good as we kind of look at the numbers today. The Dow was down 5.5 points, or not 5.5% for the week last week. The NASDAQ was down 2.3% last week. And then we've got the S&P 500 down 4.8%. So everything was not rosy last week, that's for sure, even though Friday ended up on the upside.
That Friday was just salvation from it being a disaster week more than anything else, and it doesn't look like the selling is over. And a lot of it, all of our analysts are pretty much racking it up to the same thing. All those new COVID-19 test result numbers we're seeing, they keep correcting us. It's not the second wave. It's a resurgence of the first wave of the virus, and probably directly related to the fact that we're getting out of our house, and a few of us are not being as smart as we probably should be. Wouldn't you agree?
You know, you and I had this conversation on Friday, right? People, please. You know, we're excited. We get to go back out. We get to go to restaurants. But please keep socially distancing. Wear the mask like you're supposed to when you're out. Not when you're outside, but when you're inside a store. I just think it makes sense, Dave, because we are seeing a big resurgence even here. And the concern is not that people, well, it is a concern people get sick, but to me, the concern is how many people we got in ICU. And that's the big concern for me.
Absolutely. I was looking at the state report and looking at Highlands County, and they were, for the last couple of weeks, we're averaging on the order of like 25 admissions a week into the hospital. Now, that doesn't mean ICU necessarily, but our admissions count is going up. It's going up really seriously in some parts of the country, where you had some reports at the end of last week that some of the ICU beds and ventilator supplies are running short even.
Well, at least I know that I don't know about ventilators, but I do know ICU rooms, especially like Arizona, has been there's been several articles that, you know, they're like at 85, 90% capacity across the state, and that's just not a good sign.
Not at all. Bottom line is something we've been preaching here, and we've been on the radio stations now for weeks here saying, okay, enjoy the fact that you can go out, but please, for heaven's sake, people, let's not be stupid. The other thing about the last week's drop on the market, I've got an article from Morgan Stanley out this morning saying we should be prepared for the market to drop another 7% and they're saying that's actually good news. Sounds kind of counterintuitive, doesn't it?
It does, but I think that what they're thinking there is if that's all that it goes down, if it goes down at 7% and it finds another floor to bounce off of, well, that would be a good thing, because you and I have been talking about how we need to test some lows again. And hey, another 7% would definitely be way far from the lows. But I did see something else out there that really said, hey, this is just an exciting bear market rebound, and to be expecting several V's over the upcoming months as we go in and out, and that these V-shaped recoveries are just that. They're bear market bounces before the next downturn.
There's those double bounces you and I talk about. Things always go up and then back down, whether it's a correction or a bear market. Either way, the trend is similar. There's always a peak and then another dip. And as you say, 7% would be testing a low that would be a much better low than the one that we had in March. I keep thinking on the other side, even if you're a starry-eyed optimist, when we start getting earnings reports in, toward the end of the end of this month, beginning of next month, heavily, we know those aren't going to be pretty. And if the market is up near nosebleed territory, when we start getting these really bleak quarterly reports, a great big fall psychologically would really be El Stinko as well anyway. So looking forward, looking at a more leveled off market until we get some actual data would also be a good thing for investor stability.
Well, and it would definitely be. I mean, I think if you look at where we're at right now, you're right. There's room for some more downturns, and what's that going to look like as we continue to figure out this coronavirus? And to me, it's going to be, what do the quarter-over-quarter numbers look like? Because that's going to be an indication of, this will be the first full quarter that we've seen the coronavirus active. The first quarter was a mixed quarter, but they're going to measure quarter over quarter. But the other thing they're going to be measuring is same quarter last year to this quarter, and those numbers, are going to be devastating.
Oh, they're going to be brutal. I mean, April, May, June, the second quarter is going to be the quarter in which we really feel what the coronavirus shutdowns did for the economy. And if anybody expects that to be good news, the best we're going to be able to do for good news is less crappy than they expect, right?
Exactly. Hey, I didn't see this one, but the only really indicator we have that comes out today is the New York Empire State number. And I know you finally found that. I didn't see that. How well did that one do, Dave?
Yeah, I was searching for it, and it's actually the really good bit of news that comes out in the economic reports today. The Empire State Business Index last month was minus 48.5. This month, from the month of May, they show the Empire State Business Index as being minus 0.2. That's pretty close to the zero mark, and it kind of shows a recovery. That little bit of opening that New York did actually ended up getting their economic activity up considerably from what it was, still off, but at the very least, that's got to be good news. I don't know what the expectations were, but I can't believe anybody expected it to be that much better.
No, we're getting close to zero, which in this case is a good thing, which is, you and I were talking before we went on air that, hey, zero would definitely be a banner deal for them. But we're seeing a lot of states, and we mentioned this on Friday, Oregon, again, starting to squash people back down and stay at home. And you said that Como in New York was kind of threatening the same thing.
Yeah, Como was talking about some limited shutdowns again, drive everybody back home in the hot spots as they start recovering. And New York is in better shape right now, which is really weird to say. In terms of their infection rate and new cases, they're actually in better shape than many of the rest of the states that are seeing a resurgence.
Yeah, that's true, because they stayed home for so long and they're just now getting back out. Hey, we kind of have – we are really at the end of earnings season now. There's just not much coming out there at all, Dave. But I did want to there are some things that will move the market. And this week, like tomorrow, we get retail sales comes out, which is always a big number that we look forward to seeing how that pairs up for the quarter. And then on Wednesday, we're going to have 3 important things come out. 2, before you and I go on the radio, we'll have housing starts and building permits. But later in the morning on Wednesday, we'll have crude oil inventory. And you and I both know that's going to be important because we've seen a lot of fluctuations when it comes to crude oil.
Absolutely. Listen, I'm checking where it is this morning. People that are cheering for an increase not going to be happy. So Wednesday could weigh very heavily on the crude oil markets. Something we were watching on Friday that just merits note. I don't know whether you saw any reports as far as how it went. Hertz in bankruptcy, issuing a few $1 billion worth of stock. They actually got somebody to buy it, I understood.
They did. They went to the bankruptcy court. They got approval to sell 1 billion shares or $1 billion worth, I don't know, 1 billion shares of stock. But they're in bankruptcy. I'm not sure how that plays out. I mean, that to me is just such a gamble. If you're the last man standing, you're the loser.
The stockholders are at the end of the line in any bankruptcy, which is why you and I were kind of giggling at it and shaking our head on Friday. Resetting the table, down week last week after a green day on Friday that kind of took the sting off of an otherwise really crummy week. 45 minutes before we start trading this morning, Phillip, how red are we after that little bit of good news out of New York?
Here's the thing. I can't find any green. The only green I see is the VIX. And it's up to over 35 right now. So it's moving up today. But everything else is very red. We've got the Dow down 2.25%. We got the S&P down 1.9, and we've got the NASDAQ down 1.2. Everything's going to open up really down. And gold and silver aren't helping either today, Dave. We've got silver down 2.3% and gold down 1.6%. So the commodities aren't helping. And we got crude oil. You said it was down. It is down below $35 a barrel, down 3.6% to $34.95.
Overseas markets aren't helping either. Japanese and Chinese markets all down between 2 and 3.5% of the close earlier this morning. Europe isn't quite as excited as they were. They're down, though. Both British and German markets are down by a little over 1% midway through their day. It's a lot of red today. If it's not your favorite color, I hate to disappoint. Phillip, somebody needs advice as far as how to stabilize things. You and I are sitting here talking about testing new lows. That takes a little advice from an unbiased advisor. How do I find you?
Then give us a call at 863-382-0037. Hey, schedule just a 15-minute phone consult. We can figure out where you are, maybe where you need to go, and if we can help in any way with our financial x-ray analysis of your current portfolio. And then follow us on Facebook where we repost your and my show every day. All you have to do is look under Statler Financial Services on Facebook, follow us there, and then join us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturdays, 10 a.m. Sunday mornings on Highlands News Talk, 7:30 a.m.
All righty, and I do sincerely appreciate it. A reminder once again, News Talk 730 is streamed, so you can catch Phillip online there too at newstalk730am.com, and you can stream us now at 1057lightfm.com. Phillip, thank you so much. We'll catch you tomorrow, all right?
All right, man, sounds good. Thanks.
Thank you. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, I want to thank you for joining us today. I hope that your week is off to a great start. Have a great day. I look forward to speaking to you again tomorrow.